So good morning students. देख लेते हैं. चलो, any doubt you have with respect to the last class? So you see, in this particular class, now we'll enter into understanding other concepts about the banking system, or you can say this is how these parameters which we are going to see is that how a bank comply with various requirements which are set by the RBI. So all the concepts जो आप ना कहीं basically there are so many concepts which are kind of scattered. Let me try to give you first of all in a one diagram, and then we'll read one concept like one by one each concept. So you see the bank. See, we have understood as of now that this is a bank which have two core functions. Now this bank mobilizes deposits from the people, mobilization of deposits, and again here we know deposits are liabilities, and there are two type of deposits which are mobilized by the bank: demand and time. Now suppose if the bank mobilizes rupees 100, just for understanding purpose, suppose the bank mobilized rupees 100. So this is a pool of rupees 100 which is mobilized by the bank. Now I am pretty sure you must be aware of the concept of fractional reserve banking or the concept of reserve ratios, CRR, SLR. Now what is this CRR and SLR? CRR and SLR is a concept, nothing but it's a part of fractional reserve banking system. What is that? See, please now also make this diagram also, it will be very important for you to understand. In a single diagram, it's just like I am interlinking various concepts. So you see, tell me first of all, what is CRR? Cash reserve ratio. What is that? Bank. Clear? Clear? So basically it is the amount which is set by the bank, set aside by the bank in the cash form. And it is set aside with whom? With the RBI or with himself? With itself? With RBI. The cash reserve ratio is deposited with the RBI or not? What happened? Cash reserve ratio is set aside by the bank, but that percentage of money is put where? That is put with the RBI. Does bank get any interest on CRR? No. On the other hand, if I talk about the SLR, it is also a percentage of NDTL. I am pretty sure you must have gone through this concept of NDTL, net demand and time liabilities. What is this? Basically NDTL is nothing but this. Demand deposits are what? Demand liabilities. Time deposits are what? Time liabilities. Clear? So that's why a certain percentage of NDTL, net demand and time liabilities, that needs to be set aside in specified liquid assets. Which are the specified liquid assets in SLR? Gold, government securities and not cash. So that means SLR can be set aside in the form of cash also. Clear? Now try to understand this CRR and SLR, they are set aside. These are called reserves, reserve requirements which have to be complied by the bank itself. This concept that a certain percentage of NDTL has to be set aside in the form of reserves, which are CRR or SLR, this concept is known as fractional reserve banking system. This concept is known as fractional reserve banking system, where or under which, try to understand, under which a certain percentage of deposits, this is the layman understanding deposits, in reality a technical word is NDTL, net demand and time liabilities. A certain percentage of NDTL is set aside in the form of reserves. This is a concept of fractional reserve banking system. Clear? Now here there was one concept, just to give you an idea, there's a concept given in the NCERT. Just let me write it down here itself. That is known as reserve deposit ratio. If you have gone through the NCERT, you would have come across this term, reserve deposit ratio. Reserve deposit ratio equals to the reserves set aside with respect to total deposits. So total reserves will be CRR plus SLR divided by the total deposits, basically NDT as a percentage of NDTL. Clear? Chalo. So first thing is, suppose if a bank have mobilized 100 rupees, the first prudential requirement, this is known as prudential requirement, that the bank needs to comply with is for CRR and SLR norms, which are set by whom? Set by the RBI. Now, after this what happened? It's not like the banks now, suppose if I say total of 22 rupees, suppose. Now bank is left with how much rupees? 78. So bank is now left with 78. Now it is not like the bank will lend all the 78 rupees. No. After this, another requirement kicks in. That requirement is called Basel norms requirement. Another requirement kicks in. That requirement is known as Basel norms requirement. This is Basel, and now I am just writing because 3, Basel 3 norms requirement. We will discuss definitely Basel 3 norms in detail, don't worry. But you see, now first requirement, which was prudential requirement of CR and SLR, now the banks needs to comply with Basel 3 norms, and Basel 3 norms says that you have to set aside certain percentage of capital in the form of, you can say, which cannot be used for lending purpose. So this money cannot be used for lending purpose, and this is how it is determined. I'll tell you the concept known as capital adequacy ratio. You must have heard, but I'll explain you also. So this part of the capital is again cannot be used for lending purposes. Clear? Now suppose 12 rupees have gone here. 12 rupees have gone here. So how much is left now? So out of 78, so 12 rupees if it has gone, it is left with now how much? That's 60. Now you see, this is the money that is left for the lending purpose, or capital, you can say capital left for lending. But even in this, guys, even in this, banks don't have complete discretion to lend at their own, wherever they want. They don't have complete discretion. Why? Because here comes another requirement known as PSL requirement, priority sector lending requirement. PSL requirement which mandate the bank, a broad idea I am giving you. PSL requirement says that if you are lending 100 rupees, suppose if you are lending 100 rupees, minimum 40% is mandated to lend in priority sectors. Are you getting my point? If 100 rupees is lent by the bank, suppose in this case 66, 40% of this has to be lent to the priority sectors. Now who defines the priority sectors? It's RBI. I'll give you again the detailed thing would be done, but try to understand in this, will the bank as such have the discretion? No. They anyhow have to provide this fund. So that means the only amount, the only money that is left here, this is the place or this is the capital over which banks have complete discretion to lend. Over which banks have complete discretion to lend. And it will come out to be automatically, if you see, suppose if the 100 rupees is earned by the bank, it will automatically come out to be only 30-35 rupees. That's it. That's it. So banks ultimately have only 30 to 35 rupees capital over which it have complete discretion to lend. But another thing will also kick off. What is that? That is, if the banks are lending to any sector, suppose if as a bank, if it is lending to any sector, it cannot lend below the minimum lending rate. So there is a minimum lending rate which is set by the bank itself. It cannot lend below that. So thereby another concept kicks in known as minimum lending rate, which I will be discussing this also. Minimum lending rate. Clear? And now lastly, suppose once as a bank, fine, after complying with reserves, Basel 3 norms, even I fulfill the PSL norms, even I lend to that sector and ensure that if I am giving to other sectors, I am giving the loan above this minimum lending rate. But now even after complying this, I have given a loan. If that person has been unable to repay back the loan, you know that it's an asset. That asset will turn into NPA. Clear? And here comes another concept. If the loan does not get repaid, so non-repayment of loan will result into non-performing asset. So you see, these are the various concepts over which we are going to have a detailed discussion. This I have just put it in a single, you can say, diagram itself, so that you remember it, that how these various concepts are interlinked. Now starting with the first one, this I am not taking, this I am pretty sure you guys have gone through a detailed discussion about the reserves, CRR, SLR. Clear? Just one point, tell me. So I told you, banks put their money in the cash form with the RBI under CRR. Does bank earn any interest income on this? No. Now if I talk about the SLR, does bank earn any income with respect to SLR? Yes. Okay? Yes. So now let us move to, first of all, let me talk about the PSL first of all. Before, I don't want to start Basel 3 norms directly. Okay? थोड़ा डर जाओगे otherwise. Let me start with concept 1, that is priority sector lending. See, it's a very simple concept. Let me explain you and then I'll dictate certain points. The factual information I'll dictate. See, try to understand why the RBI mandate the banks. Why the RBI mandate the banks to lend to certain sector. The reason behind this is, it is said that banks are not having only commercial objectives. It says that bank is not just having commercial objectives. Apart from commercial objectives, it also have social objectives too. apart from commercial objectives, it also have social objectives too. That's why this PSL norms which are defined by the RBI, it's a part of social banking. It's a part of social banking. Clear? Now what I mean with the social, it says, see why the bank should only give loan to those areas which is generating high returns. It should also give loan to the areas where there is possibility of poverty elevation. There is an improvement of farmers' income. So priority sector comprises of mainly those areas. Clear? Now who defines the list of priority sector? Definitely RBI. RBI comes up with the list of priority sectors. Clear? So basically now two things from the exam perspective that you need to remember is what is the list, that which all sectors are the priority sector, and second is which banks have to comply with the PSL norms. Which banks and how much is the requirement. If you remember, tell me in the yesterday's class I told you what is the PSL requirement of RRBs and what is the PSL requirement of SFB, Small Finance Bank. 75 required. देखो आप टेबल में 75. Now you try to understand. See these banks. वैसे general requirement is 40%. General requirement that banks needs to comply is 40%. But you see RRBs, a small finance bank, why they have to comply with higher requirements? You can understand the logic itself. I told you small finance bank is created with a niche purpose, with a single purpose is giving the loans to those section which is unserved or underserved. Yes or no? So that's why if your purpose is this, that means your PSL requirement has to be higher. Because PSL norms, so priority sectors, they comprises mainly of that sector itself, unserved and underserved sections. Even I talked about RRBs. RRBs का भी क्या purpose? If you look at in the RRB line, I told you the key objective of RRB is to increase the credit to agriculture and allied sector. The line it is clearly written. So जब आपका objective इसीलिए इसमें है, why do you want to give loans to the other sector? Don't. That's why your PSL requirement is higher. Are you getting my point? Now tell me, if I compare the urban cooperative banks and commercial banks, what according to you that which will have the higher PSL requirements? Urban cooperative or commercial, or will they have the same requirement? Tell me, will they have the same, or urban cooperative bank will they have the higher, or C option is commercial bank will have the higher requirement? Urban cooperative will bank have the higher requirement because the purpose is clear. Urban cooperative bank, again I told you why they have been created, so that again uplifting the community. Clear? So that's why I'll tell you now the requirement and the other list of priority sector which is important from the prelims exam. So now write it down some points now. First is priority sector lending, write it down. So there is a doubt that about Nivek. So priority sector, it is not decided. Let me tell you, priority sector is not decided on an annual basis or in every 5 years. Nothing like that. It's the list which has been prepared by the RBI. Now if RBI wants to add new sectors, then they can do it. It's not like they have to do it on an annual basis or on a periodic basis. There's nothing like that. Like if I talk about 3 years back, RBI added new sectors in the priority list. So हमें वो भी याद रखने होते हैं न्यू सेक्टर्स क्या क्या लिस्ट हुए. ठीक है नवीन? चलो, write it down. It is a regulatory policy. ठीक है, right? Little bit fast. It is a regulatory policy that requires banks to allocate a portion of their loans to specific sectors, which are considered important, to specific sectors which are considered important for the development of the country's basic needs, for the development of the country's basic needs, and thus given priority over other sectors, Clear? Next, the origin of PSL can be traced back to 1966. The origin of PSL can be traced back to 1966, but the RBI formalized the definition of the priority sector. RBI formalized the definition of the priority sector in 1972. Next, you write it down. Third point, list of priority sector. First subpoint, agriculture. Second subpoint, MSMEs. Third subpoint, export credit. Fourth subpoint, education. Fifth subpoint, housing. Sixth subpoint, social infrastructure. In bracket you write it down. Social infrastructure, in bracket, schools, comma, drinking water facilities, comma, sanitation, etc. Next subpoint, renewable energy. And one more subpoint, others. In bracket you write it down. Includes advances to weaker section. Others में bracket में includes advances to weaker sections. Advances means loans. Advances to weaker section, comma, loans to startups up to rupees 50 crore, etc. Loans to startups up to rupees 50 crore, etc. ठीक है? Now next point come out of this subpoint category. Next point, different banks have different overall PSL targets. Different banks have different overall PSL target. First subpoint, public sector banks 40%. Second subpoint, private sector banks in bracket including foreign banks, bracket close, requirement is 40% only, 40%. Next, third, small finance banks. Small finance bank, how much? 75%. फोर्थ पेमेंट बैंक, कितना होगा पेमेंट बैंक का? यस, दे डोंट लेंड, सो दैट मीन्स जीरो. ठीक है, पेमेंट बैंक्स जीरो. In bracket, if you like, for your convenience, you can write can't undertake lending. Fifth, regional rural banks. Regional rural banks. How much? 75%. And lastly, urban cooperative banks. Urban cooperative banks is 75%. See, urban cooperative banks is like, earlier if I talk about the requirement, that the PSL requirement was 40%. Clear? 40%. अच्छा, कहीं पे भी जब word use होगा, so this word will be used. 40% of A and BC. Like in the reserve ratio, what was the word that was being used? NDTL. NDTL is in terms of liabilities. Now loan hai, so loan, that means in terms of the credit which is being disbursed, 40% of that. So A and BC is nothing but adjusted net bank credit. आपको सिर्फ full form type से पता हो तो it's more than enough. Idea line is whatever the total credit is going, 40% of that, just for your understanding. Clear? Now I was talking about cooperative banks. Cooperative banks were having a requirement, earlier it was having a requirement of 40%. But then RBI changed their PSL requirement for cooperative banks and said that by 31st March 2024, they have to comply with 75% PSL requirement. Clear? So by 31st March, that means if you are now going for the prelims 2024, you can clearly say that cooperative banks, urban cooperative banks have a PSL requirement of 75%. Clear? Now, now banks, one they have, see, try to understand, banks, one requirement they have is 40% of the total loan should be going to the priority sectors. But it's not just only about the overall target. It says that apart from the overall target, there are sub-targets also. Sub-targets means, guys, that for agriculture, particular percentage should be going. For MSME, the bank should be giving particular this much. So there are not just only overall target, क्योंकि आप देखो list to the priority sector is too big ना, but there are also sub targets also, which you need to remember. No, but suppose if the line comes that there are overall targets and sub targets, you should be knowing that. Now there is one very interesting thing, that suppose if a bank does not meet the PSL requirement, if a bank does not meet the PSL requirement, बैंक कहता है चलो मैं नहीं कर रहा, then no. Anything else? Sorry? What they will purchase? You are going in the right direction? Yes. So let me tell you, if the bank failed to achieve PSL targets, there are two options. There are two options, not one option. Option 1, option 2. Option 1 was the traditional route, that is fund transfer to the RIDF. Let me explain this first of all before I move to the second option. Option 1 says that if the bank has failed to achieve the PSL target, assuming bank A has achieved only 37% PSL requirement, which means it is short of how much? 3%? Yes or no? It is short of 3% PSL requirement. The first option says that the RBI asked the bank to put the shortfall, this is a technical language, RBI asked the bank to put the shortfall in total PSL lending to a fund known as RIDF. RIDF is Rural Infrastructure Development Fund. So this remaining money which you haven't lent, that means the shortfall in the overall PSL lending should be then deposited to a fund known as RIDF, Rural Infrastructure Development Fund. In bracket you can write it down, managed by NABARD. Managed by NABARD. Clear? See, suppose the bank have a mandatory target of how much? 40%. Now, but if they have just lent 37% to the priority sector, so how much they are short to meet the total PSL requirement? 3%. Now, this 3% has to be deposited to a fund known as RIDF. So, ये जो 3% है, this money will be deposited to a fund known as RIDF. There is a fund known as RIDF, Rural Infrastructure Development Fund. And this fund is managed by the NABARD. NABARD manage करते हैं. But bank is like, will I be getting some income if I put this money? Yes. Yes. So that means if the bank deposit the shortfall in PSL requirement, they will also get some interest. Although this interest amount is very less, but they will get some interest income. Clear? अब इसमें देखो, so banks कहेगा यार, banks will be like, it is better to at least give a loan to the priority sector rather than putting the money here. Why? They will say, yaar, how much interest I'll be getting here? 3%, 4%, that's it. And if I would have given a loan, I would have earned 7%, 8%. Or at least this I am talking about 9% also. Yes or no? So thereby this was like, I can say that this was like not good for the banking system. Thereby RBI came up with another option, option 2. That is known as Priority Sector Lending Certificate. Priority Sector Lending Certificate. You understand this part first, option 2, and I'll dictate certain points of option 2. Try to understand nicely. Do you guys know the concept of carbon credit? फिर easy है, समझ में आ जाएगा. ठीक है? देखो. Still, see, there is a bank A. Bank A which has given, which has complied with the PSL norms and given almost 40% of loan to the priority sector. Bank B is like 39%. They have given loan of 39% to the PSL. There is a bank C, 38%. Bank D, 37%. ठीक है? So which bank has complied with the PSL norms as of now? A. Now bank B, C and D, they can avail the option 1. There is no doubt about it. But they are waiting for the option 2 also. What is option 2? RBI says that just because you have given a loan extra to the priority sector, you are rewarded with PSL lending certificates. You are rewarded with PSL lending certificates whose value is equal to 2% of extra loan. Whose value is equal to 2% of extra loan. So you see, A को सिर्फ एक certificate दे दिया है. Okay, you take this certificate. It is like that आपको एक certificate मिला है जिसकी value है 2% of extra PSL certificate. तो एक 1% का, एक 2% का, ऐसे करते करते उनको सर्टिफिकेट दे दिए. बैंक इज लाइक, व्हाट विल आई डू फ्रॉम विद दिस? ऑलरेडी देयर आर सो मेनी फाइल्स इन माय बैंकिंग सिस्टम ऑलरेडी. व्हाट विल आई डू विद दिस? अगेन अ पीस ऑफ पेपर. RBI simply says to the bank, you just wait and hold it. You don't have to go anywhere and you will see that this is not just a piece of paper, it will earn an income for you. So bank was like, okay, let me wait, let me hold for it. Now, on the other side, RBI is discussing with bank B, C and D. It is like, okay, if you don't want to put the money to the RIDF, what you can do is, you can buy the PSL certificate which is equal to the amount of shortfall. That means shortfall B का कितना है? 1%, here 2%, here 3%. So the RBI has asked the banks that why can't you buy the PSL certificate which is equal to the amount of shortfall? You can buy that. So bank B, C or like, yeah, this is good. Why? Because I don't have to put my money there where the money is locked and I am not getting good income. Instead, why can't I go to A and buy the certificates which will complete my PSL requirement? सिर्फ मुझे सर्टिफिकेट मेरे को चाहिए कि यार ये मेरे पास सर्टिफिकेट है एंड दिस विल कंप्लीट माय पीएसएल रिक्वायरमेंट. सो बैंक बी, सी, even D is also trying to reduce their shortfall. They all are going to A. Now you tell me A is having limited certificates, only 2%, but demand is higher or not? Demand higher, supply less. Will the price increase or decrease? So tell me, will the pricing of the certificate, will it increase or decrease? Increase. Because pricing again here, pricing is market determined. Market determined means if there are higher supply, if there is a higher demand, the certificate, who hold the certificate can be sold at a higher price. So now B will be bidding, I'll give you this much money. C is like, okay, I'll give you this much money. So now you see the A is able to earn that extra income or not. And what A has to do? Simply give this piece of paper to B or C, whatever. Suppose A decided to give it to C. So A has given that extra certificate. See, A has given extra certificate because 40% requirement of mine is met. It has given just extra that piece of paper to C. And C has to pay a good commission fee or this fee, PSL fee. So A is earning an extra income. C will be able to meet its requirement. Now C don't have to put the money into the RIDF. C is able to meet that PSL requirement just by paying a nominal fee. So C का भी अच्छा हो गया. A is also happy. So this is a win-win situation. This is known as PSL certificate thing. B or D, nothing if there is no, yes. Because you see, that's why A will be earning higher. That's why A will be getting higher fee. क्योंकि अगर suppose करो equal है हर चीज, तब तो बहुत ही easy है ना. Nobody like who holds that asset will not be, you can say who holds that asset will not be able to earn that much. But it is because of scarcity of that asset which increases the price. Clear? So this is how PSL certificates like work. एक last point. A ने PSL certificates तो transfer किए, but try to understand who has actually given the loan to the person. A? It's A who has actually given the loan and for which they have got the extra certificates. Does the transfer of certificate mean that there will be transfer of loan from A to C? No. Certificate is simply, you can say, just an accounting instrument so that you comply with your PSL requirement, but it does not mean that I am transferring my 2% loan to you. It does not mean that. Clear? So this is the simple concept of the PSL certificate. You write it down and I am pretty sure you will understand much better once you write these certain things. Yes? Banks are PSL lending.
But is it due to lack of supply or due to lack of demand?
No, PSL lending, why it is they are doing it? See, many banks, sometimes you tell me, suppose if you would have been a bank, how happy you would be to lend it to the priority sector. If you look at the list of priority sector, you see to that do you think that it is going to generate the returns for the bank? Fine, chalo return ho bhi gaya, but don't you see that there's a possibility of high NPA, that means non-repayment from that side. There's a high possibility. So this is one, first of all, reason that banks are generally reluctant or hesitant to give loans to the priority sector. One. Second, there are so many procedural formalities are there which discourages the farmers itself or MSME itself to access the loan. So it's not just only one from the supply side, that is bank side, but also from the demand side also. This happens because of these two major reasons. Clear?
So,
yes.
the interest on the loans will be earned by bank A?
Yes. Because the loan, as I told you, the loan is with the A itself. It's just a certificate so that C is also happy. That's it. जैसे कार्बन क्रेडिट में देखो एमिशंस तो अल्टीमेटली कौन करता है ना, बचाता कौन है? सपोज एक बचाती है कार्बन क्रेडिट में, दूसरा ज्यादा करता है, तो सर्टिफिकेट की वजह से ही वो मीट कर पा रहा है, बट एक ज्यादा कर रहा है ना एमिशंस, ऐसा थोड़ी नहीं उससे एमिशन कम हो गए, है ना, सेम कंसेप्ट है. चलो we'll see. No. See. Yes, C is paying, will be paying a fee. Now, as I told you again, just let me make it clear here. With the transfer of certificate from A to C, there is no transfer of loan from A to C. And if there is no transfer of loan, which is an asset, the asset belongs to A itself. So that means the interest income from that asset belongs to whom? A itself. Clear? That's it. C will not be earning any income. Chalo, write it down. ठीक है, priority sector lending certificates about PSLC. PSLC is a mechanism. PSLC is a mechanism to enable the banks to achieve the targets, PSL targets. PSLC is a mechanism, it's a mechanism to enable banks to achieve the PSL targets and sub-targets by purchase of these instruments. By purchase of these instruments in the event of a shortfall. In the event of a shortfall. In the event of a shortfall. Next point. Under the PSLC mechanism, comma, the seller sells fulfillment of priority sector obligation. The seller sells fulfillment of priority sector obligation and the buyer buys the obligation with no transfer of loan or risk. And the buyer buys the obligation with no transfer of loan or risk. Next point. It is a short-term accounting instrument. It is a short-term accounting instrument that will expire at the end of financial year. It is a short-term accounting instrument that will expire at the end of financial year. Next point. Scheduled commercial banks, comma, regional rural banks, comma, local area banks, comma local area banks, comma small finance banks, comma small finance bank, and urban cooperative banks. And urban cooperative banks are eligible to buy and sell these certificate. Are eligible to buy and sell these certificate. Clear? Next point. PSLC would be traded. PSLC would be traded through the core banking solution. Through the core banking solution portal of RBI. Through the core banking solution portal of RBI, in bracket eCuber. Through the core banking solution portal of RBI, in bracket eCuber. Let me just give you an idea about core banking solution. Tell me, see, many of you might have opened the account in your home branch of a particular bank, but just 1 minute, but today tell me, are you not able to enjoy the banking service online at any time, even the bank branch is not open? Plus, are you not able to enjoy or access that account from this Delhi itself? Yes. What is this? This is known as a part of core banking solution, which means that you can enjoy the account or access to account at any time, 24/7, from anywhere. From anywhere. Clear? So it's not like that, suppose if I have opened an account only with this UCO, suppose particular branch of a particular place, I have to go there and access that account. No. It has not been like this right now. It is known as, that's a core banking solution, means I can access my account from anywhere, from any place, or at any time. That is the idea of core banking solution. In the same way, if I talk with respect to the banks, see, banks also open current account with the RBI. Because I am pretty sure you must have seen RBI is the banker of banks. Have you heard this? RBI is the banker of banks. So banks also open their account with the RBI. But they must be open their account with the RBI from a particular place. एक ही जगह से open किया होगा. But why all the bank branches they are able to access that same account? Why? This is known as core banking solution. और अब RBI का core banking solution is known as eCuber. RBI का. Clear? RBI core banking solution is eCuber. उस पोर्टल को eCuber बोलते हैं. Core banking solution is a concept which is like now in place since so many years. Chalo, tell me before I any doubts before I move to the another topic.
Sir, is it necessary for banks to lend money to PSL like private?
Necessary, yes, mandatory. मैंने line लिखवाई होगी.
What are the consequences if they don't?
I told you na, the consequences, like suppose first of all it is mandatory. If not, they have to achieve these two requirements if they failed to do that. And if they don't comply with such requirements, definitely you see RBI, as I told you, provide this LAF facility. They might not be given to that, or they have to get the loan at a higher rate from the RBI. Clear? So this is mandatory requirement to them. Tell me next. Nothing? Chalo. So you see, this was first concept known as priority sector lending. Now there are also, apart from this, the PSL, there is another capital left over which the bank has complete discretion to lend to any sector. Over which the bank has complete discretion. But only requirement is the loans has to be given above the minimum lending rate. Now the point is, who decides this minimum lending rate? Who decides this minimum lending rate? First. Second question, based on which parameters? Are you getting my point? There are two questions. One is, who decides, and second, based on what parameters. So this is known as the external one, this is the recent one, but you should know certain concepts. Minimum lending rate refers to the lending rate below which the banks cannot lend. Below which the banks cannot lend, except in below which banks cannot lend. Except in extraordinary situations. Clear? Now this minimum lending rate is determined by the bank itself. This minimum lending rate is determined by the bank itself. But very important point itself, guys, it is determined by the bank itself based on the methodology provided by the RBI. Based on the methodology provided by the RBI. So one thing is clear, that this minimum lending rate is set by the bank itself. And if it is set by the bank itself, can't I say that different banks have different minimum lending rate? And आप check करना, अभी कभी भी आप देखना, you'll find out minimum lending rate for home loans in different banks or auto loans in different banks will be different. Why? Because banks itself set the minimum lending rate based on the methodology provided by the RBI. So this line also, if bank itself, that means different banks can have different minimum lending rate. ठीक है? Different banks can have different minimum lending rate. Now, this minimum lending rate, as I told you, just look at the concept. It is the methodology provided by the RBI. Now, this methodology which is provided by the RBI has undergone a change many times. And why it has undergone a change? So that to smoothen monetary policy transmission. Now, let me explain you this. Line तो मैंने बोल दी, लेकिन let me explain you this idea. See, yesterday I explained you one concept known as monetary policy transmission. Yes or no? आप मुझे बस एक छोटी सी चीज बताना. This is RBI. This is banks. Then we have the customer. Clear? Now tell me, I explained you monetary policy transmission. First of all, monetary policy transmission refers to the process through which the actions of the RBI are implemented at the ground level via banks or financial institutions. Clear? Via banks or financial institutions. Now let us try to understand this concept. ये तो मैंने आपको सिर्फ definition दी. See, during the period of recession, suppose during the COVID pandemic, what RBI would have wanted, first of all, at that time, achieve what objective it wanted to achieve at that time? Sorry? नहीं, अरे कोविड के टाइम पे तो प्राइस ऐसे ही कम है ना. Money increase. Why money supply increase? Yes, basically at that time, see, when there's a period of recession, that time idea is to boost economic growth. We need high economic growth, and to boost economic growth, what do you want here? You want money supply. So you try to understand objective is economic growth, and to achieve this objective, money supply needs to increase. Now for this, basically RBI will undertake expansionary monetary policy or contractionary? Expansionary. Now, let us see expansionary. Give me one example of expansionary monetary policy, whether RBI will increase the repo rate or reduce the repo rate. Reduce the repo rate. So, RBI try to understand it have reduced the repo rate. RBI reduced the repo rate, thinking that money supply will increase here. Money supply will increase here, that will boost economic growth. But I told you, monetary policy transmission does not go directly from RBI to the customers. It has to go via process, via banks or financial institutions. It has to go via banks or financial institutions. Now fine, RBI have reduced the repo rate. But suppose if, just normal scenario, RBI have reduced the repo rate, which makes the borrowing for the banks from the RBI cheaper or expensive? Cheaper. So that means cheaper capital to banks, and if the banks have get cheaper capital to banks, what they are likely to do? They are likely to reduce the lending rate or increase the lending rate? Reduce the lending rate. If they reduce the lending rate, will this encourage borrowing or discourage borrowing? Encourage borrowing. So this will encourage borrowing. More borrowing means more money supply in the market. Yes or no? And more money supply will be able to achieve this higher economic growth. But suppose even if the RBI reduce the repo rate, what about lending rate if it does not decrease? If the lending rate does not decrease, will this objective be achieved? So this monetary policy transmission, which we have maintained nicely, will that be able to, we can say that, will the monetary policy transmission be fast? No, it will be slow. It will be slow. And why does it happen? Try to understand. See, we are working on this part right now. RBI have reduced the repo rate, suppose by 100 basis point. 100 basis points means how many percent? 1%. And the RBI and the banks, they have just reduced the lending rate by 30 basis point. That is by how much? So tell me, RBI decreased the repo rate by 100 basis point, but banks have reduced the lending rate by 0.3%. 0.3%. Will the loans to the customer become that much cheaper? No. Will that encourage that much borrowing? No. It will encourage, but only to a certain extent. So where is the problem coming up? The problem coming up is the lending rate is not in tune with the repo rate. And because of which what happened? The monetary policy transmission gets affected. The monetary policy transmission doesn't become smooth. Or you can say such methodology or such thing hinders monetary policy transmission, hinders the smooth monetary policy transmission. A smooth monetary policy ye thi. This is a smooth monetary policy transmission. But if banks don't reduce the lending rate, even after RBI reduce the repo rate, that means monetary policy transmission is not smooth. And that's why now you try to understand that RBI changed the methodology. Continuously it is changing the methodology to ensure, or you can say for faster and smoother monetary policy transmission. So that again I am telling you, this lending rate is in direct sync with the repo rate. So that this lending rate is in direct sync with the repo rate. That is the main objective. तभी हम लोग ये lending rate के बारे में पढ़ रहे हैं, and it has been asked once in the UPSC also, जब launch हुआ था 2016 वाला MCLR. Clear? So now coming back, we were talking about the minimum lending rate. Why it is important? It is important, this method, or you can say this methodology is continuously changing by the RBI, so that you can say to achieve a smooth and faster monetary policy transmission. achieve smooth and faster monetary policy transmission. Now, simply little bit now more information. So how it has evolved from the internal benchmark lending rate, from the internal benchmark lending rate to, it has shifted now to external benchmark lending rate. External benchmark lending rate. So the lending rate, the minimum lending rate have shifted from now internal benchmark lending rate to external benchmark lending rate. Now what all you must have studied, या सिर्फ आपको नाम पता होना चाहिए. It started with, the first one is benchmark prime lending rate. Benchmark prime lending rate. So that even if sometimes what happens, this word is mentioned, this word benchmark prime lending rate is associated with what? ठीक है, क्योंकि अब ये क्या काफी पुराना है, so I don't think so it will be asked, but still you write a line about this benchmark prime lending rate. In bracket put a year 2003. ठीक है, write it down. It was used as a benchmark rate by the banks. It was used as a benchmark rate by the banks for lending till 2000, for lending till 2010. Full stop. Under it, it was used as a benchmark rate by the banks for lending till 2010. Full stop. Continue. Under it, bank loans were priced. Bank loans were priced on the actual cost of funds. Bank loans were priced on the actual cost of funds. Clear? Second, write it down. Base rate system. ये काफी चला था लंबा. Base rate system. Base rate in bracket 2010. Base rate. So write it down under base rate system. It was the minimum, or it is, you can put it, it is the minimum interest rate of a bank it is the minimum interest rate of a bank below which it cannot lend. Below which it cannot lend. Next point. There used to be only one base rate for each bank. There used to be only one base rate for each bank. For each bank, which is fixed by the RBI. Sorry, which is fixed by the bank itself. Which is fixed by the bank itself, based on the RBI guidelines. Based on the RBI guidelines. Clear? Next, it was based on the average cost of funds. Third point, it was based on the average cost of funds. Average cost of funds, which is calculated by considering the minimum profit margin, which is calculated by considering the minimum profit margin. Third, internal benchmark lending rate is MCLR in bracket 2016. So you can write the full form of MCLR, marginal cost lending rate. marginal cost lending rate. Marginal cost lending rate in bracket 2016. So write it down. First point under this. It was the minimum benchmark rate. It was the minimum benchmark rate for floating rate loans. It was the minimum benchmark rate for floating rate loans, which was based upon the marginal cost of funds, unlike the base rate, which was based upon the average cost of funds. Unlike the base rate, which was based upon the average cost of funds. Next point. MCLR was revised on a monthly basis by considering factors that includes repo rate. By considering factors that includes repo rate. Next point, MCLR was more responsive to changes in policy rates. MCLR was more responsive to changes in policy rates as compared to the base rate. Clear? Now from 2016, basically now you write down about external benchmark lending rate, which was adopted in 2019. And write it down now, first point under external benchmark lending rate. So write it down. The problem with IBR is internal benchmark lending rate, IBR. या IBLR लिख लो, जो भी IBLR लिख लेना. The problem with IBLR, that is internal benchmark lending rate, was lack of transparency in the system. Which resulted in, the problem with the IBLR regime was lack of transparency in the system, which resulted into poor monetary policy transmission. Next point. RBI mandated the banks to adopt a uniform external benchmark. RBI has mandated the banks to adopt a uniform external benchmark from any of the given four options. First subpoint, RBI repo rate. Second subpoint, 91-day T-bill yield. 91-day T-bill, treasury bill yield. T-bills पढ़े हो नहीं पढ़े हो? पढ़े हो ना, वो मनी मार्केट का पार्ट है. सो ट्रेजरी बिल्स क्या होती हैं? Are they zero coupon securities or not? Treasury bills, are they zero coupon securities? भूल गए नहीं जल्दी. See, treasury bills has zero coupon security because they don't give you any interest. They don't give you any interest, that's why they are called zero coupon securities. Clear? They are issued for 3 maturities, 91 days, 182 days and 364 days. T-bills issued for less than 90 days are called as T-bills, suppose other government securities. Yes, cash management bills. So suppose if the T-bills issued for less than 90 days, it is known as cash management bill. Same characteristic, nothing else. Okay. So second, so we were writing that they can adopt a uniform external benchmark from any of the 4 options. First, we have written RBI repo rate. Clear? Second sub point is 91 day T-bill. T-bill की जो yield है 91 day की, आप वो ले लो benchmark. Third sub point 182 day T-bill yield. 182 day T-bill yield. And then lastly, fourth is any other benchmark interest rate. Any other benchmark interest rate developed by the Financial Benchmark India Private Limited. Any other benchmark interest rate developed by the Financial Benchmark India Private Limited, FBIL. Clear? Third, now once this is done, so you see, if I go through to this slide, our first slide, so you see we have completed this reserve ratio is already done by you, PSL we have done, this minimum lending rate we have done. Now we are moving to this Basel norms, that is this part. Sorry? Just when the changes, see अब देखो इसकी खासियत बात क्या है. See, if I talk about the internal benchmark lending rate, internal benchmark, yes, it was decided by the banks, but उसमें ना methodology में ये रहता था कि based on the cost of funds, the operating expenses. So what happened? The banks were like not transparent enough, like they show that okay, the expenses are very high. That's why we have not reduced our lending rate by 100 basis point, unlike the RBI repo rate. RBI ने repo rate 100 basis point से declare किया, but we have not. But अब इस external benchmark की खासियत बात क्या है? First, if I talk about RBI repo rate, mainly major banks they have linked their lending rate to the RBI repo rate itself. RBI repo rate की policy आती है हर 2 महीने में. If repo rate is decreased, their lending rate will also be decreased. If repo rate is increased, their lending rate will also be increased. It's a very simpler, transparent mechanism. No, like you can say, opaque system. So there is nothing like if I will say that is based on frequency. There is not a uniform frequency. It is based upon like monetary policy is coming every year. So sorry, every 2 months. If they change, the lending rate is also likely to change. Apart from that, yes, they have the option to reduce it based on their operating expense. If they feel that their operating expense have reduced, they can do that. But this makes it much more transparent unlike the previous regimes. Clear? अब जैसे T-bill yield है, जो अभी है, उनको अभी रखना ही पड़ेगा अगर वो benchmark choose करते हैं T-bill yield वाला. So whatever the T-bill yield as of now, they have to choose a benchmark. They have to put the lending rate according to that right now. If T-bill yield is changing, then accordingly the lending rate will also be changing like that.
Bank can switch in between also.
Sorry? No, they have to choose only one benchmark for one set of loans. One set of loans, one sector of loans. For the another sector, they can choose the another benchmark. Like if I talk about the home loans, they can choose one benchmark out of this. For the another sector, they can choose the other benchmark. Are you getting my point?
And it will be chosen for one financial year or
No, it doesn't matter na basically. Suppose if they have chosen for one sector, they have to choose that only.
no, for example, repo rate it changes within 2 months, but T-bills are for 90 months it's for 3 months.
So what?
So how banks are switching from
They are not switching. They are like, suppose if they have decided to choose repo rate, they have to continue with that. They have to choose one parameter out of this. They don't have to switch from 1 to 2, 2 to 3. Why? क्यों चूज करना है इतना? It is the 4 options are given. इसमें से एक चूज करना है, चारों नहीं चूज करने हैं. They have to choose only one out of these 4, not all the 4. It is like you can say options being given to them. आप कोई भी benchmark चूज करो, but एक चूज करना है इनमें से for one set of loans, one sector. If yes, another sector के लिए आप दूसरा चूज कर लो, but one sector के लिए if you have fixed it, you have to continue with that. ऐसा थोड़ी नहीं, सपोज मेरे साथ रेपो रेट में आपने लोन लिया एंड देन आफ्टर सम मंथ्स इट इज डिसाइडेड नो 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 मैं टी बिल्स के बेसिस में लोन दूंगा, वापस रिटर्न दूंगा. कम ऑन मैन, हाउ इट कैन बी? ठीक है, चलो. सो नाउ दिस पार्ट इज ऑल्सो डन. नाउ वी आर एंटरिंग इनटू द बेसल नॉर्म्स. सो यू अंडरस्टैंड फर्स्ट ऑफ ऑल फ्रॉम द डायग्राम इटसेल्फ कि बेसल नॉर्म्स क्या कर रहे होंगे. मतलब व्हाट डू यू थिंक दैट बेसल नॉर्म्स विल इंपोज रिक्वायरमेंट ऑन द बैंक? टेल मी. One thing is you can see from here that they are imposing additional capital regulatory requirements, which means they put a constraint on the bank to set aside the capital, this capital which it cannot use it for lending. They're clearly saying that you have to set aside a capital which cannot be used for lending. Now why and all, let us try to understand that aspect. देखो, see, if I talk about a banking system, see if I talk about the banking system, tell me banking system is operating in a multiple risk environment or not? If I show you the risk, if I tell you the different type of risk which the bank face, try to understand. Suppose as a bank and you are like customers, you have come to me and asking for a loan. Fine, I have checked your credit worthiness and all. Now what happened? Based on that, I have given you the loan. But there is always a credit risk associated with that or not. That if you don't repay the loan to me on time, that is one risk known as credit risk. That is known as credit risk. So bank definitely, you see, it's my money and I have given it to you, and if you don't repay it back to me, what will I do? So there is a credit risk. Second, not just a credit risk, you can talk about market risk. Bank is operating in a market. Bank is operating in a market. See, you are doing fine, you are repaying it nicely, but sometimes the market scenario, because of market scenario, you are unable to repay the loan. Like talk about the 2020 COVID pandemic. Many people, they have not given the loans on time or not. Even you see, this was acknowledged by the government and even the RBI, who have asked the banks that you can voluntarily reduce the EMIs for some months, yes or no? कि आप थोड़े महीने के लिए अपना लोन पेमेंट छोड़ दो. So this is my point is, it's not that you are unable to repay, you are, but the market scenario have such that you are unable to repay it on time. Clear? So this is another risk known as market risk. And third is operational risk. Operational risk, what happens that suppose, if suppose we are running this particular building. Now to run this particularly, there is a human resource involved, then there is a machinery, then there is an internet involved, all this thing. Now suppose if the light goes and we don't have the power backup, or if the internet suddenly starts disrupting, or suppose something happened and the video guys doesn't come, or suppose even you see, suppose anything apart from that happen, this is known as operational risk. So even the banks, they have the manpower also. That is also another risk. Suppose the manpower engaged in a nexus with the party and gave a loan to them. Nexus kind of a thing, कि भैया through the nexus they have given a loan not without checking their credit worthiness. This happened. आपने ICICI बैंक का ही देखा होगा आपने? नहीं देखा नहीं न्यूज़? It's been a long time. Any time this loan which have turned into NPA, it is mainly because of collusion of nexus between banking officials and the businessmen. Yes or no? That's why. So NPA is it is NPA, that is asset turns into NPA. That means an asset is not being able to generate return to the bank through these three various risk environment. It could be one, the capability where you have invested, it has not generated return, credit risk. Second, the market scenario has become such like that. Suppose if I talk about global recession time 2008-12, a big period where many companies failed to give the loans back. Clear? Or third, operational risk. So the point which I am trying to make here is that banks operate in a multiple risk environment. And there are three types of risk which the banks mainly faces. Which the banks mainly faces. One is credit risk. Second is market risk. And third is operational risk. Now, if this is a risk, now this money which the banks have given, this money which the banks have given to whom? To the people, sorry, to the borrowers. Is this the bank money or someone else money? It is someone else money, it is the people's money. Yes or no? It is not the bank's money as such, because bank, I told you, if you remember, bank is just a financial intermediary to mobilize deposits from the people and to undertake lending. Yes or no? Mobilizing deposits and undertake lending. So now suppose, try to understand bank which is operating in a multiple risk environment and giving a loan, if it doesn't come back, if that asset doesn't get paid, that asset will turn into NPA. But more importantly, that asset turns into NPA, fine, the bank's capital will reduce. But suppose suddenly the people like us who have deposited their money to the bank, we approach to the bank and say, okay, now give us the money, give us the money. Bank is like, I don't have the money. That will create panic like situation or not? And when this panic like situation create, the bank shares started to tumble down. And ultimately what happened? Bank crashes, creating an issue of trust in the banking system. I'm pretty sure now any one of you, like each one of us, is not having that trust on the banking system, because we knew that these banks colluded with the officials, colluded with the businessmen, giving the loan without checking their credit worthiness. And when we started going to bank for asking back our money, they are like resistance, they are not having that capital. So thereby, to prevent this situation is known as bank run. So again, just to give you an idea, bank run is a situation, I'll dictate this part, don't worry. Bank run is a situation where banks don't, like suppose when the people is going to the banks to take out their money, but banks is not having the capital. Why banks is not having the capital? Because they have given a loan to the people, and because of certain risk, these money have not come back. So even if we go to the bank and ask for money, it has not been coming back. This scenario is known as bank run, which simple means bank has become bankrupt. Bank bankrupt ho gaya. Are you getting my point? See, try to understand. Bank is simple सी functioning है. This is bank, mobilize deposits, giving loans. Clear? This loans will generate interest payment and repayment. Yes or no? Now this interest payment and repayment, when it will come, this interest payment and repayment will come, this will be used to withdraw the deposits of the people. But if this has stopped, this has stopped, so what will happen? Will the banks have capital? Less capital. And suddenly, when many people starts going to the bank asking for their deposit, many people started going to the bank asking for their deposit, will they face a situation known as bank run? because they don't have the capital, bank becoming bankrupt. So thereby, to prevent the scenario like bank run, there are Basel Accords are established. Basel Accords, which says that bank should set aside additional capital that cannot be used for lending purpose. That's why, to prevent situations like bank run, because it clearly says that bank operate in a multiple risk environment and they have to set aside such capital so that this bank run like situation doesn't come. They have the extra pool of resources. अब देखो उनके पास कौन कौन से हो गए, fractional reserve वाले reserve ratios plus this extra capital. Will this be helpful to give back their deposit? Yes, to a certain extent. तो वो panic like situation तो नहीं होगी ना. Clear? So now you write down some points about Basel Accords. First of all, I'll elaborate more points. Basel norms, write it down. Also known as Basel Accords, comma, these are a series of three sequential banking regulation agreements. These are a series of three sequential banking regulation agreements, in bracket Basel 1, 2 and 3, 1, 2 and 3, bracket close, set by the Basel Committee, on banking supervision. Next point, these accords establish capital requirements. These accords establish capital requirements and risk measurement for global banks to ensure that financial institutions maintain enough capital on account to meet their obligations and absorb unexpected losses. Next point, it is an effort to coordinate banking regulations across the globe. With a goal of strengthening the international banking system. Next heading you put it Basel 3 norms. ठीक है, Basel के I told you Basel Accords are nothing but it came up with three set of norms, Basel 1, Basel 2, Basel 3. Now the countries are in they have enforced Basel 3 norms, so it's important that we read little bit about Basel 3 only. So write it down about Basel 3. First point, these are the internationally set of These are the internationally set of agreed measures. These are the internationally set of agreed measures developed by the BCBS, BCBS is Basel Committee on Banking Supervision, ठीक है, developed by the BCBS in response to the financial crisis of 2007-9. In response to the financial crisis of 2007-9. Next point. The measures aim to strengthen the supervision, regulation and risk management of banks. Next point. Continued with three-pillar approach. It continued with three-pillar approach that was introduced under Basel II norms. Pillar 1. Minimum regulatory capital requirement. Minimum regulatory capital requirement. Minimum regulatory capital requirement. So you see, pillar 1. There are three pillars we'll talk about, but coming to the pillar 1, see, अभी तक हमने वो तो पढ़ा ही नहीं कि सर वो एक्स्ट्रा कैपिटल आया कैसे. We have just understood the concept that extra capital which the bank has to set aside is a part of pillar 1 only. Pillar 1 clearly says of the Basel III norms that the banks needs to set aside that extra capital. And this extra capital, it has to set aside, additional capital, I'll put the word, additional capital to be set aside, based on risk weighted asset. Based on risk weighted assets. And we have discussed this or not, the different type of risk: credit, market and operational risk. So it says that the bank needs to set aside the capital based on risk weighted asset. That means if certain assets have higher risk, the banks needs to set aside higher capital or lower capital? Higher capital. So suppose if I tell you that suppose an asset which is a normal asset, now it has turned into NPA. Will the bank has to set aside more capital or less capital? More. Why? Because if it has become an NPA, is there a higher chance of repayment or lower chance? Lower chance means high risk, that asset has become high risky. So thereby more capital has to set aside. And this is determined that how much capital to be set aside. This is determined through a concept known as capital adequacy ratio. Capital adequacy ratio, CAR. Or you can also sometimes capital to risk asset ratio, CRAR. ठीक है, दोनों चलेगा। Capital adequacy ratio. Basically, Basel III norm says this, or this capital adequacy ratio, how it is calculated. Try to understand. CAR equals to capital to be set aside divided by risk weighted asset. Risk weighted assets. Capital adequacy ratio is capital to be set aside divided by risk weighted assets. Now just tell me one thing. As I told you, this is a CAR which have been given by the Basel III norms. Basel III norm says that the banks needs to maintain a minimum CAR of 8%. Minimum CAR of 8%. Minimum. So देखो risk weighted assets के बेस assets को we have found out that based on what risk कुछ value आ जाएगी, and this value minimum is 8 minimum. So can't we find out the capital to be set aside? Now suppose अगर यहां पे जो risk weighted asset, this risk is increasing, this has to be maintained 8. So this will increase or decrease? It has to increase. अगर denominator बढ़ता है, this is basic CSAT only, if the denominator is increasing, what will happen to this value? It will decrease. But हमें ये maintain करके रखना है 8%. This is the minimum requirement set by the Basel Accords. So 8% इसको maintain करने के लिए this numerator also needs to increase. That's what I told you. If the risk increases, the capital to be set aside, the absolute capital to be set aside, so that the CAR remains the same. CAR कम नहीं होना चाहिए. Clear? Now another point. Fine, Basel III norms recommended a minimum 8%, but India, RBI, it's the RBI in the India's case has said the minimum CAR in our country is how much? 9%. We have adopted higher standards from as compared to the global one. So RBI has recommended or adopted a minimum CAR of 9%. Minimum CAR of 9% for Indian banks. For Indian banks, in bracket, higher than Basel III norms prescription. Higher than Basel III norms prescription. एक डेफिनेशन भी लिख लो कैर की. चलो ये बताओ, who decides how much CAR, like how much CAR has to be maintained with the bank? Is that the bank itself? RBI. So यही सिर्फ स्टेटमेंट पे क्वेश्चन था एक बार. Earlier although 2018 times I think, that CAR is decided by the bank itself. No, it is decided by the RBI. Yes, they can maintain higher, but the minimum CAR is decided by the RBI. Clear? So write it down about definition of CAR first of all, one point. Capital adequacy ratio ensures that capital is set aside, which cannot be undertaken for lending, and thus banks have enough capital, to take a reasonable amount of losses, before they become insolvent. So let me tell you again. So CAR ensures that capital is set aside which cannot be undertaken for lending, and thus banks have enough room or capital to take a reasonable amount of losses, before they become insolvent. Last one, another factual point जो आप बॉक्स में लिख सकते हो, which banks have to maintain care and how much. So आप एक बॉक्स में बना सकते हो care requirement for different banks. Care requirement for different banks. First, public sector banks. Public sector banks equals to minimum 9% but recommended 12%. Minimum 9% but RBI recommend the public sector banks to have 12%. It's a recommendation, not mandatory. Mandatory minimum 9 hai. Clear? Second, private sector banks including foreign banks. Private sector banks including foreign banks, minimum 9%. Minimum 9%. Third, small finance bank and payment banks. Small finance bank and payment banks, minimum 15%. Small finance bank and payment banks. Fourth, urban cooperative banks. Urban cooperative banks, minimum 12%. Regional rural banks, minimum 9%. देखो बैंक्स का परसेंटेज तो नहीं पूछेंगे, बट simply it can ask, consider the following categories of bank 1, 2, 3, 4 and then it can say which of the given above banks have to maintain the care requirement. Clear? ऐसा उसके अलावा apart from that NBFCs also maintain care requirement. Write it down one more line. अच्छा कुछ नहीं लिखा क्या? RRB is 9%. ठीक है, इसके अलावा नेक्स्ट पॉइंट देखो, लिखो NBFC also have to maintain care requirement. NBFC also have to maintain or comply with care requirement. NBFC, non-banking finance companies, yeah, which we'll cover tomorrow. बोलो. Yes, payment. No, but they don't do. They invest 75% of the money in the government securities. And now, this is another very different thing that have come in Basel 3. Let me talk about this. See, अभी तक क्या होता था ना? This risk-weighted assets. Suppose if I have invested in a government security, we say that government securities are zero risk. This is the very basic thing we generally say कि government is zero risk. We at least will be able to get the money. So thereby अगर गवर्नमेंट का जीरो रिस्क है तो यहां पे रिस्क वेटेड एसेट कुछ है ही नहीं. So thereby why to maintain the care? But Basel 3 norms brings a change in that. In the global financial crisis it was realized जब ग्रीस में जिसमें इन्वेस्ट किया जिसकी सिक्योरिटीज में they lost their money or not. Global financial crisis में it was realized that no government security is zero risk. And that's why Basel 3 norms attached certain risk to that type of asset also. Definitely lower, but attaches some. So इसीलिए now we use the word practically it carries no risk. Earlier we used to use this word government securities are zero risk security. But today in the present times we say practically carry no risk. The reason behind it's the Basel 3 norms itself. And why Basel 3 norms introduce certain risk after the Greece crisis. You guys don't know much about this. Greece crisis जैसे जब global financial crisis हो रहा था, उसमें one country that suffered the most that was Greece. And Greece was on the collapse, verge on the collapse. So it was realized, yes, a country can also collapse. Their securities can also go in losses. That means if you have invested in the securities, the government might not be able to repay back your loan. So how can we assume that government securities are zero risk? Definitely. So thereby Basel 3 norms changed that methodology. Clear? भले ही कम risk है, लेकिन है. So now coming back to your point, payment banks, although they cannot undertake lending, 75% they invest in government security, 25% in deposits with other bank, which makes less risky as compared to the other person, but definitely risky. तो वो रिस्क वेटेड एसेट में अपने आप देखो रिस्क कम होगा. आप नीचे समझो, अगर डिनोमिनेटर कम है और कैर 8 सपोज 15% मीट करना है, तो कैपिटल टू बी सेट असाइड विल आल्सो बी लेस और नॉट. तो कैपिटल टू बी सेट असाइड विल ऑटोमेटिकली बी इट बी एडजस्टेड. ठीक है, चलो. सो दिस वाज पिलर 1. मैंने एनबीएफसीज हैव टू कंप्लाई विद कैर रिक्वायरमेंट, वो हो गया ना. ठीक है. सो दिस वाज पिलर 1 ऑफ द बेसल 3 नॉर्म्स. अगर कोई आपसे पूछे 3 पिलर अप्रोच दैट वाज स्टार्टेड, दैट वाज अडॉप्टेड, नॉट आई एम टेलिंग यू इन बेसल 3, इट वाज अडॉप्टेड इन बेसल 2, बट इट कंटिन्यूड विद बेसल 3 विद सम चेंजेस. तो ये जो आइडिया है ना 3 पिलर्स का, दैट वाज अडॉप्टेड इन बेसल 2 नॉर्म्स. क्लियर? सो पिलर 1 वाज मिनिमम रेगुलेटरी कैपिटल रिक्वायरमेंट. राइट डाउन पिलर 2. Pillar 2, supervisory review. Supervisory review. According to this, banks were needed to develop and use better risk management techniques. They were needed to develop and use better risk management techniques in monitoring and managing all the 3 type of risk, in monitoring and managing all the 3 type of risk that a bank faces. All the 3 type of risk that a bank faces. ठीक है, we have already know this. If you want to write, hyphen में लिख लो credit, market and operational risk. It's up to you. Then pillar 3, market discipline. Market discipline. Write it down. This needs increased disclosure requirement. This needs increased disclosure requirements, but banks needs to mandatorily disclose their CAR, risk exposure. Mandatorily disclose their CAR, risk exposure, etc. to a central bank. ठीक है. So pillar 1, pillar 2, pillar 3. That's it. Moving to, क्या हो गया, क्या डिक्टेट करना है, बोलो. Any doubt before I move to the another 4th point? Last line, what was that? Market discipline, na? This needs, see, market discipline is about nothing but transparency. Market discipline, कभी भी आप ये word देखोगे, market discipline is about transparency, corporate governance principles. So that's why here in this, it needs disclosure requirements, disclose, such as CAR or risk exposure to the central bank. Exact line में dictate कर देता हूं. This needs market discipline. This needs increased disclosure requirement. Where banks needs to mandatorily disclose their CAR. CAR is CAR, capital adequacy ratio, that how much you are maintaining. Minimum is 9%. Are you doing above than that or not? Risk exposure, how much risk your asset faces. Risk exposure, etc. to the central bank, because central bank is the regulator of the banking system. Clear? चलो. Any doubt? बस अब तो easy है. जो मेन पार्ट था एक, हाँ,
PSL सर्टिफिकेट में एक डाउट.
बोलो, अच्छा होना चाहिए।
आरबीआई और नाबार्ड के बीच में कॉन्फ्लिक्ट क्रिएट नहीं होगा?
नहीं, एक्चुअली अगर मैं तुम्हें बताऊं जो नाबार्ड क्रिएट हुई है ना, हाँ, दैट इज एक्चुअली क्रिएटेड एग्रीकल्चरल क्रेडिट। और मैं आपको बताऊं थोड़ी सी हिस्टोरी एग्रीकल्चर में बताता ये, बट नाउ लेट मी टेल यू दिस स्टोरी। RBI when it was created in 1935 as a central bank, it was one of the first central bank which had a separate agricultural credit department. Otherwise agricultural credit department होता नहीं है central bank में कि why the central bank will have the agricultural credit department. It was one of the first central bank. But definitely slowly it was realized that RBI should not be doing this activity. RBI should not be. Yes, RBI took extreme measures. It even created other organization, other department like Agriculture Refinance Corporation under the RBI itself. But it was definitely realized that this is not the job of the RBI. We have to create one institution for this particular purpose. And thereby the NABARD was created based on B. SRIRAM committee in 1982, taking over the functions of RBI. So first thing is NABARD has been created out of the RBI itself. In the earlier times NABARD, RBI also had a stake, but now it is not. NABARD is now fully owned subsidiary of the government itself. Earlier it was having some stake also. Now coming to this about the conflict, you see this priority shortfall, if it is happening, that means the money is not going to the agriculture or the other activities. So thereby this money goes to the RIDF, and let me tell you, RIDF is the money which is spent on rural infrastructure, connectivity, irrigation. So वो पर्पस या तो हम डायरेक्ट देके फुलफिल कर ले, या हम एक फंड में इन्वेस्ट कर रहे हैं which invest in the rural infrastructure. हमारा ऑब्जेक्टिव क्या है? टू अचीव दैट बेसिकली सोशल पर्पस. हमारा ऑब्जेक्टिव वही है कि हम कैसे अपलिफ्ट करें एग्रीकल्चर को, टू प्रोवाइड क्रेडिट टू एग्रीकल्चर. Either the banks give directly to the farmers. If you are feeling shortfall in that, you do it via another way. क्योंकि RIDF से फंड उधर ही जाता है पैसा. So it's not like that the conflict is about ना happening and nothing. ठीक है, और बताओ. चलो इसको हम स्टार्ट करेंगे. दिस टॉपिक विल नॉट बी एंडिंग इट. Now fourth, another very important, this is the third part you can say of the banking system which I cover. Non-performing assets, NPA. उस डायग्राम में देखोगे we have completed each and everything except that NPA. Clear? Now you see the bank have given a loan. See how does it work? So how does this loan system work? ठीक है, let's try to understand this part. Bank gives a loan to the borrower, and borrower is supposed to pay the recurring interest payments. Yes or no? Recurring interest payments plus repayment of loan at the time of maturity. At maturity. Clear? So this is nicely the thing that bank provides a loan to the borrower. Borrower is paying that interest payments and the repayment of loan at the time of maturity. इसी को जब मिक्स करके ना बेसिकली क्या होता है ना, आज के टाइम पे इसी को मिक्स करके एक इंस्टॉलमेंट बना देते हैं, EMI इंस्टॉलमेंट. Earlier there used to be like interest payments and repayment of loan. So now combining this एक installment create हो जाती है. An installment you have to pay it continuously. Now this installment has to be paid on a timely basis. And till the time, now make this another timeline also. ठीक है? See, this is a loan due date or installment due date लिख लेते हैं हम, due date. Clear? If, try to understand, if the asset, if the loan is being, or the interest payment or the installment is being paid on time, it is considered a nicely standard asset. It's working fine. That means before the, on the due date, if the asset is paying its like installment return. But it doesn't happen like that. Sometimes the due date get mixed, missed. Sometimes the due date doesn't get, due date get mixed. So what happened then? Slowly when the due date crosses 90 days, which means the installment amount or the interest payment have not been paid till for the period of more than 90 days, then that asset converts into a non-performing, then that asset is known as a non-performing asset. But before that, this asset is considered to be an standard asset. Try to understand more points. See, this is a simple thing. Borrower has taken a loan, paying the installment regularly. If it is paying regularly, it is perfectly fine. But even if it has missed this loan repayment or installment amount for some days, like for 5 days, 10 days, it is still a standard asset. But as soon as the installment remains overdue for a period of 90 days, more than 90 days, that asset become a non-performing asset. Clear? That asset become a non-performing asset. Now, you see from this zero date, this is 0 to 90 days, once you have missed your installment, your account, your loan account is put into a special mention account. A special mention account, let me talk about this. Your account is put in a special mention account. Like if your overdue date is 0 to 30 days, your account is put under or classified as a SMA 0, special mention account 0. If it is overdue for a period of 30 to 60 days, SMA 1. If it is overdue for a period of 60 to 90 days, classified as SMA 2. But even, let me tell you, even your account is SMA 0, SMA 1, SMA 2, it is considered a standard asset. It has still not converted into NPA. So then the next question automatically comes, then what is the purpose being served by classifying account as SMA? What is the purpose it will serve? Tell me. Sorry? Yes, that is one. See, the very important point is, suppose if we know that certain accounts have become overdue, this will give an idea in the earlier stages itself that okay, it is likely to convert into NPA, and thereby we have to take the measures right now. Instead of taking the measures after 90 days, this SMA account helps to identify that the risk associated with the assets and take corrective measures in the beginning before it turns into NPA. Because once it turns into NPA, I'll show you another prudential regulation kicks in known as provisioning coverage ratio. I'll talk about that. So उससे बचने के लिए it is very important for the banks to classify their asset as standard assets. take corrective measures so that it don't turn into NPA. Because if it turns into NPA, it is going to harmful for the banks only. You will realize very soon why. Clear? So I hope you have written this definition of NPA, but write it down about SMA. NPA की definition clear है ना? Installment, NPA refers to any asset for which the installment has remained overdue for a period of more than 90 days. Now you write down little bit about SMA accounts, just 1 or 2 lines. Special mention accounts are the assets or accounts that show symptoms of bad asset qualities in the first 90 days itself. Before it is identified as NPA. In the first 90 days itself, before it is identified as NPA. Next point, the classification of SMA was introduced. The classification of SMA was introduced by the RBI in 2014. Clear? Now, see, now let us move this side. An asset was a standard, but once the installment remained overdue for a period of 90 days, it has become NPA. Now, this NPA, if the asset which has been NPA, if it has remained NPA up to 1 year, that means this period is 12 months period, up to 1 year plus 90 total. If it has remained NPA for 12 months, it is classified as substandard asset. If it has become NPA for 1 year or more, अगर 1 साल तक NPA है, if it has become NPA up to 1 year, तब तो वो substandard asset है. But if it has become an NPA for 1 year plus, it is considered a doubtful asset. And lastly, after 3-5 years of being an NPA, that asset is likely to be called as a loss asset. So this 3 is nothing but classification of NPA only. All these 3 are nothing but NPA only. But NPA को मैंने classify कर दिया. Yes, 90 days के बाद. That's a definition. Try to understand. Substandard asset is an asset which has remained NPA for a period of up to 12 months. तो NPA ये कब बनेगा? 90 days पे. वहां से वो 12 महीने तक अगर NPA है, if it has remained NPA for a period of up to 12 months, then it is substandard. ठीक है, चाहे वो 2 महीने हो 3 महीने हो, it is considered a standard asset. But जैसे ही वो NPA 12 months 1 day, it will shift to doubtful. Clear? इतना वैसे ईयर में मत जाओ, don't worry about, that is not important from the exam perspective. Exam perspective is, don't you think the quality of an asset is deteriorating from substandard to doubtful to loss? Yes or no? This is important to understand. That's it. And why? Because now let me tell you another prudential requirement known as provisioning coverage ratio. See, it says this requirement mainly kicks in, let me tell you, mainly kicks in when the asset turns into bad asset. That means you are saying, sir, that if the asset is standard, will this requirement have to be followed by the banks? Not as such. RBI don't give as such requirement. But once the asset turn into a bad asset, which means the RBI or the bank, they don't know whether that money is going to come back or not. Whether that money is going to come back or not. And if that money is not going to come back, we have assumed that money is not going to come back. Tell me whose money it was? It was public's money. So public के लिए वो पैसा हमें देना ही है, देना है, वो तो liabilities है ना. But we are not sure about that money is going to come back or not. So thereby provisioning coverage ratio says, as soon as the asset turns bad, you have to provide for that bad asset. Provide means you have to set aside the capital as a percentage of bad asset. You have to set aside the capital as a percentage of bad asset. Why? Just try to understand. Suppose this is reserve requirement. This is capital adequacy ratio. ठीक है? This is PSL norms. This is PSL norms. This is based on minimum lending rate concept. Now this is the loan which is given as a loan and it has become an asset. Clear? But certain asset became an NPA. NPA, that means overdue, installment is overdue for a period of more than 90 days. Now this is loan which you have given, it is not the bank's money, it is people's money. It is actually people's money and you are giving loan. Now the provisioning coverage ratio says if the asset of rupees 100 has become an NPA, you have to provide for the asset. Provide means you have to provide the capital or you have to set aside the capital. You have to set aside the capital which cannot be used for lending. You have to set aside the capital which cannot be used for lending. But capital, a percentage of what? A percentage of bad assets. Are you getting my point? Percentage of bad asset. अगर ये 100 रुपए का है, मानो RBI says 15%. RBI says PCR requirement is 15%. Your NPA is 100. So 15 rupees you have to set aside which you cannot use for lending. This is provisioning capital. So what happened? What is the impact of provisioning? Will it increase the bank's capital for lending or will it decrease? Decrease. And if it decrease, tell me, will the bank's profitability will increase or decrease? Decrease. So that's why, as I told you, it's very important that the asset don't turn bad, because as soon as the asset turns bad, another requirement kicks in and the banks have to set aside more capital which cannot be used for lending. And this has to be calculated as a percentage of bad assets. Try to understand. अब होता क्या था, देखो मैं आपको ना कहानी सुनाता हूं थोड़ी सी. आपने कभी सुना होगा एवरग्रीनिंग ऑफ पेटेंट, तो सुना है. एक एवरग्रीनिंग ऑफ लोन्स भी कभी सुना होगा. एवरग्रीनिंग ऑफ लोन्स क्या आता है समझो. सी, बैंक इज गिविंग लोन टू द बोरोवर. Borrower is paying it. Bank is giving a loan again. Borrower is repaying it. Borrower has stopped repaying. Why? Just because their infrastructure project or some project get stalled. They are unable to raise more funds. If they have stopped giving installment for a period of 90 days, what will happen to the bank? Bank asset will turn into NPA. जैसे बैंक asset NPA बन जाएगा, this requirement, PCR requirement will kicks in. Bank has to set aside extra capital. So this borrower says that why do you want this asset to turn into bad asset? Why do you want? You can do one thing, you can restructure my asset. This word is known as restructure. Restructure means that you can increase the asset time for me, you can increase the maturity time for me and reduce the interest rate. So it is called restructuring, restructuring the terms and conditions. So what will happen I will be again able to repay the loan, and accordingly your asset will fall into standard category. Your asset will fall into standard category and you will be prevented from that PCR requirement. लेकिन ये कभी ना कभी तो एंड इसका बेकार ही होना है. Yes or no? Because what you are doing, just delaying your, you can say ना, just delaying the bad thing. होनी तो है ये, but delaying the thing. इसको कहते हैं evergreening of loans. Why the banks were doing it? So that they are prevented from the provisioning requirement. And why the borrower needs it? Borrower कह रहा है हमें तो बढ़िया लोन मिलता जा रहा है और हमारी terms conditions more favorable होती जा रही है. So the borrower is happy, but the banks they are not. Banks को लग रहा है कि evergreening हो रहा है just to prevent them. अब एक बार क्या हुआ, यही 2015 में this crisis was going on, underlying there was a huge NPA, but it was not being revealed in the market. 2015 में NPA का एकदम भमार फूट गया. That India have huge NPAs. Ab huge NPAs, each bank they were able to, somehow RBI was able to find out the extent of NPA. And when they were able to find out the extent of NPA, the banks were not having the capital to set aside as a provisioning requirement. The banks were not having the capital to set aside the money as a provisioning requirement. Provisioning requirement means अगर मेरा 100 रुपए है, मुझे इसके लिए कैपिटल सेट असाइड करनी पड़ेगी. And this percentage, let me tell you, this percentage increase from substandard to doubtful to loss. Obvious है क्या नहीं है? Loss means the asset is very less chance to come back. तो कितना होगा provisioning requirement? पता है RBI has put how much? 100%. Substandard में 15-30% like that. तो अगर आपका ये है और सब स्टैंडर्ड एसेट है एनपीए में 15-30%, बट और डाउटफुल होता है 50%, 70%. इट इज अप टू द आरबीआई हाउ मच दे वांट द बैंक्स टू सेट असाइड द कैपिटल एज अ परसेंटेज ऑफ बैड एसेट्स. अगेन आई एम टेलिंग यू एज अ परसेंटेज. लेकिन अब एक डाउट आएगा, ठीक है, पहले तो प्रोविजनिंग समझ लो कि क्या होती है, ठीक है. नाउ यू गाइस टेल मी that sir, this concept CAR and PCR they are likely to be same, or sir it is same or it is different. CAR और PCR कुछ डिफरेंस है क्या नहीं है? जैसे पहला पॉइंट, नहीं आरबीआई को देना पड़ता है. नहीं आरबीआई को कुछ नहीं देना पड़ता है किसी में भी. They have to set aside in there with themselves itself.
Before the loan goes into NPA.
Yes. CAR requirement, try to understand first of all. CAR is associated with respect to risk weighted asset. It doesn't matter whether the loan has gone into NPA or not. PCR comes into picture when the loan goes into the NPA. That is one. Second, CAR is a global requirement. PCR is a requirement made by the RBI itself. CAR a global requirement. But again understand this thing which I told you, PCR is an additional requirement apart from CAR. ऐसा नहीं है कि PCR कर रहे हैं तो will not be complying with CAR. No, CAR has to be there. PCR is an additional requirement, compliance requirement apart from the CAR. PCR is an additional capital. Clear? तो ये नहीं है कि दोनों सेम है, यहां पे CAR ये PCR. ठीक है? So little bit you write down 1 or 2 point about PCR. Provisioning coverage ratio indicates how much money a bank has to set aside to cover loan losses. So PCR equals to provisioning capital divided by gross NPAs. PCR equals to provisioning capital divided by gross NPAs. Next point, it gauges or it assesses how well a bank is prepared, to cover its losses from NPAs. ठीक है. Third, PCR increases with the time period of NPA. Obvious है ना? PCR increases with the time period of NPAs. ठीक है. So this was the brief discussion about the NPA. We'll continue from here itself tomorrow about the NPA. I'll briefly talk about the twin balance sheet. Have you heard of twin balance sheet? 4 balance sheet. I'll talk about that. And then what were the measures taken to address the NPAs? Clear? Even including the recent, I would say not recent now, 2020 when it was framed, bad bank that was created. Clear? पूरा वहां तक जो भी latest development has been taken, we'll cover that to address the NPAs. So that's it for today. Take care, study well. Yes. अब देखो सब में कोलेटरल नहीं होता है, बिल्कुल किसी में होता है किसी में नहीं होता है.